Welcome back, Alpha Hunters. Hope you guys are doing well. The markets are closed for the week of January the 29th of 2023, and we are seeing some very strong bullish action in the market. So let's dive into what kind of went on this week, and we'll kind of talk about some of the different markets and get a game plan going into this next week. So I'm not going to spend too much time focused on other stocks just because we have such a major week coming up this next week with the Fed. Okay, here on the SPY for the week. We started off the week pretty strong. Nice little 15-minute little bearish hammer candle came in right to start off the week and then broke that, took off screaming higher. Got about 400 and then tried to pull back a little bit in the afternoon and then closed above it on the end of the day there on Monday. Tuesday, not a whole lot happened. We had a lot of just anticipation waiting for the big dog of the week, basically reporting their earnings, Microsoft. So we had a little gap down, just kind of traded sideways in it. We didn't really do too much on Tuesday. And then Microsoft earnings came out, and here's the drop. So we dropped on the market, and we kind of hung out for a little bit, for about an hour, just kind of selling down. And then we just ripped higher the rest of the day, and we pretty much closed bullish right at the end of the day. And yeah, there you go. Wednesday was bought up. It was bought up pretty strong. We were actually down a little bit over 1% on the market on the SPY here. And the tech, the Qs, they also grinded higher. And Microsoft actually traded lower for about 30 minutes and actually bounced and bottomed 30 minutes into the market open. They actually didn't stay down at their lows for an hour, and then they took off. So it's just kind of interesting to see that. But it didn't matter. Thursday, it just kind of continued. We gapped up a little bit off of some earnings, traded lower, and then just pushed higher. And this is basically off of TSLA, Tesla's earnings. So yeah, it just kind of continued to trade higher. And Tesla, knocked it out of the park. They gapped up like 10%, mostly hung out around 10% up on the day, pretty much the whole day. And then Friday just kind of continued. We had a little bit of a gap down just because we had a pretty large thrust there at the end of the day on Thursday. So we had a little bit of a gap down and then just pushed higher, sold off, and then just kind of pushed higher. And then look at this little sell down we had come in right at the end of the day on Friday. From all the bullishness that we've seen really over the past like 2-3 weeks, really for the whole month of January, actually, we had a lot of selling come in right at the end of the day on Friday. Pretty large volume compared to a lot of the other closing of the days before it. Really interesting to see how much volume kind of came in there. And that is why when you look at the daily time frame, you do have this huge upper wick here. A lot of that was due to that last 15 minutes really kind of selling it down. So that was pretty much how the market went this week. And we can see we are making new highs. And as we continue to make new highs on the market, we are actually still having declining volumes, okay? Now, when we were on the live stream this week, and first off, thanks for everybody that came by the live stream. We actually had someone new, like really new, come by the live stream this week, 18 years old, wanting to get into trading and stuff like that. Always come by. Feel free to ask questions. I'll try to help guide you the best I can into, just starting to learn. Really, that's about all you need to do the first few months of investing or trading. Just learn. A lot of it's just learning the very easy things, okay? But, always come by, ask questions. Man, if you do come by and ask questions, always glad to have you. But this week on the live stream, we're just kind of talking about, I could definitely see a spot where we sell down towards the end of the day on Friday, or maybe have like a little rollover on the second half of the day on Friday. We really got it in the last 15 minutes, as I was just kind of showing you. And then I could just see us having, a couple days kind of sideways, maybe a little bit down on Monday and Tuesday this next week. And then we'll get into possibly what I think might happen on Wednesday. But yeah, we could be in for a heck of a week this next week. So need to get that game plan ready to go. Okay, so some of the things I was kind of looking at this week was the SPY 2-hour chart. Now, you can kind of see this, or at least this pattern kind of play out on the 2-hour, the 3-hour. But I'll show you here on the 2-hour chart, because I know a lot more people look at the 2-hour than maybe the 3-hour. But what's really kind of interesting here is we do have a little bit of a divergence here. Okay, and we have a couple divergences actually playing out. So we do have from the peak here, from this peak high that we had back from, the December prices, we have a little bit of a low. We have a little bit of a low. And we also have a high on the stochastics compared to where we are now. Okay, so that's kind of where we currently are, right? Back from the December high on prices, and the stochastics little high hump. It's also there on the MACD, but I'm just going to draw the line on the stochastics. So what's kind of interesting is we do have that divergence kind of playing out there. Now, another little divergence that we do have playing out here is from this high on the MACD. It's also there on stochastics, but I'm just not going to put two lines on the same indicator. And this group of highs that line up with that move on the MACD and the high that we recently put in. So as you can see here, over really the past month or so, we do have a little bit of overbought signals here on the relatively, near term, so should we rest? Yes, we should absolutely rest on the market, but is it a little bit, maybe even a little bit more done than that? Possibly. It's going to take time for it to kind of overdo some of these signals that we're seeing on the MACD and stochastics. But even here on the relatively shorter time, between mid-January to where we are this Friday, we have what is, I like to kind of reference a resting divergence where, okay, the market's making higher highs, but the indicators are not as strong. So basically it kind of says to me, okay, the market definitely needs to rest here a little bit. And that was kind of one of the things I was kind of mentioning last week. You see this little blue zigzag line. I was kind of mentioning last week. I wanted to see a little bit more, or really about 2 weeks ago when I kind of talked about that. But I wanted to see a little bit more of a resting type situation before the market picked a direction. Well, we didn't really get that too long. It was choppy, but we have continued to push in that bullish direction. In my opinion, just a little bit too strong. We've also seen a lot of people turn excessively bullish on the market. And when too many people get going in one direction, that's typically when the market likes to reverse or at least stop going in that direction, at least on the near term, and possibly reverse out later. So we'll see how it plays out here over the next couple weeks. Taking a look at the Qs here, the Qs actually breaking above that December and November high today. So, or at least on Friday, I guess if you're watching it Saturday, Sunday, there you go, breaking above those highs today. And this is probably one of the reasons why you're seeing probably a little bit of selling kind of come in, as we've been on a pretty good run for several weeks now, and it's almost been straight up. So, we got to rest a little bit before you probably push through and get that solid push through. Looking here at the IWM, nice little push through the November, December highs. This week, I think last week I talked about we got through those highs, but I think I had the adjust data for dividends on, and I don't know why that is. I usually always have that off, but I just didn't notice it. So actually, I think I said last Wednesday, we got above the November highs last week and then wicked above it and came back down. That's because I had this adjust data for dividends on. And that's my mistake. I'll try to make sure I don't do that again. I don't even know how many days I had that on, but I kind of noticed some of my charting was a little bit off this week. So we actually broke those highs Thursday and Friday of this week. And, we even broke September's highs, actually just looking at this now. So yeah, I mean, we broke multiple months of highs basically this week here on the IWM. So it'd be kind of interesting to see if we do hold and get above that here early this next week before we get to the Fed day on Wednesday. The DIA, the Dow Jones Industrial Average ETF. This one is the one I've kind of mentioned last week. Really kind of watch this one. If the heavyweights are not being supportive of the bull market, this could be where we see the other kind of market ETFs roll over, right? Because the big weights, they have the much larger weighting on those other market cap weighted ETFs. If this kind of starts to roll over, well, those are going to have, struggle problems as well. So we've also seen the DIA have a really strong bounce from those October lows. And now they've been struggling. They've had a lot more of the sell-off that we saw a couple weeks ago. And they are not close to taking out those December highs. So it just kind of says to me that a lot of the performance that we've seen in the marketplace over the past month or so, really since the new year, that a lot of it's just speculative stuff. Not to say that it's like all speculative or it's just a speculative market. I'm not saying that. If people are liquidating or underperforming in these areas, it's going to put pressure on the other market cap weighted type ETFs. All right, I'm briefly going to talk about two stocks. Microsoft, MSFT here. Nice little bullish action, actually, after that gap down that we got on Wednesday. and a follow through on Thursday, Friday. Basically nothing burger, just a big solid red doji here kind of coming in. And this thing hasn't done much in several months. It's just kind of been hanging down at these lows. And recently for the month of January, it only recently turned positive. So yeah, not much going on here with Microsoft for most of the month of January until recently, finally turning bullish and just being up very marginally on the month, of only 3.5%. But their earnings that came out this week definitely saw a retraction, kind of in cloud growth area. And I think one of their executives, I think it was their CFO, basically said deceleration of growth. So on their conference call, so they were actually up after hours when they first reported numbers, and once they got to the conference call later in the evening, that is when you saw Microsoft actually start to roll down and turn negative in the after hours and then open negative. But it didn't matter because they got bought up. TSLA here. This is another big time one for earnings this week. This thing has been on a monster tear. Let me ask you something. Do you know how much Tesla has been up from the lows that it put in early January? And if your answer is like 40% or so, well, you're going to be wrong. You're going to be wrong big time. It actually got up to about 77% today from the lows it put in on Friday, January 6th. Crazy. You know, I mean, this is no small speculative growth stock. I mean, this is a pretty large company. You know, like I think they're top 20 in P500 for market cap weight. So this is such a strong move, and one that maybe kind of gives a little sense to understand the current marketplace that we're in really so far for this month, that you're seeing a lot of speculation come back in, especially stocks that worked like they were back in late 2020 and 2021. I'd be a little bit cautious here, a little bit cautious. Not really sure if Tesla's going to continue to run like this going into next week, but without a doubt, this is a super strong run, and we do have a huge gap here that I would expect it to fill sometime here in the near future. Okay, so let's kind of talk about plan for this next week. And let me briefly show you this real quick. I know a lot of people have been watching this downward trending line that we've kind of gotten coming down from all the peaks throughout the year. And I know I've been wanting to kind of say, hey, make sure you're watching the right one. With log off, we were kind of breaching through it back on Monday, and then we kind of held through it on Tuesday and Wednesday. We finally got through that really on Thursday's gap up. We kind of hit right on, the log turned on Monday, and we didn't break through it, not until we gapped up on Thursday off of Tesla's earnings. And then, hey, we kind of continued higher throughout this week, but I was wanting to see a little bit more of a consolidation in here throughout the end of January and possibly the beginning of February, and maybe start to make a move higher with, maybe Fed Day this next Wednesday not being really too much of a big catalyst, and just kind of chopping sideways and then pushing up like halfway through February. I would have loved to see that. That would have turned me probably even a little bit more bullish. But seeing this such a strong move, really, anything that was dropped, the market bought up, and it bought up very aggressively. So it was very much like a 2021 type mentality. We were definitely feeling some of those vibes, very much like a bear market rally. That's kind of what it feels like. And, I'm not saying we're not going to go higher, but, I would expect us to see a little bit more of a retracement later on. So we'll see what happens. We got a big day, big week coming up. So let's kind of talk about that. So Monday and Tuesday, most of the time when we've gone into Fed week, we have not done much on Monday and Tuesday. That has been the norm, and it's been like that for a past few times. The one thing I will say is for those that are expecting the Fed day Wednesday to be a pivot on the market, and maybe this is what will take us back bearish. On the live stream this past week, we did go back and look at all the days that were Fed days throughout 2022, and none of them were major market pivots. None of them were major market pivots. They were all kind of in between already the trending move. And that's basically all you need to know. So I wouldn't expect Fed day to be a major market pivot. So if we continue to move higher Monday and Tuesday and break above these highs, I wouldn't expect Wednesday just to kind of sell off and then continue to sell down. I wouldn't expect that. Okay, that's not what I'm saying. So Monday and Tuesday, I would expect a little bit more sideways and a pullback action, maybe just sideways activity at all. With Wednesday, probably just going to be the day of the week, even though we have major earnings this next week. We still have Apple, we have Google, and I believe we have Amazon as well. So we still have major earnings this coming this next week. But what I'm kind of expecting is Wednesday is still going to drive much of the week, right? As a lot of us know, the market is anticipating the Fed to raise 25 basis points. I don't think that will be a shock to anybody. I think the odds of that is like 99% right now. I don't think there's going to be any kind of deviation from that. Expect that to be from the Fed, their decision. So once we get that, I would imagine the market then screams bullish and comes and takes out these highs. And actually, there's a high back over here from September 12th. So I could see the market trade higher and get above December high and possibly this little September high. And there will probably be a lot of stop losses that are just set right above, these days. Okay. So I wouldn't be surprised if that is what happens in the initial reaction from the Fed announcement of 25 basis point increase. And how far are we currently from the close today up to that point? Roughly over 1%. Have we seen the Fed days be more volatile than 1.5% or 1% in any direction? Just a whipsaw? Well, yeah. I mean, we've seen it basically every freaking time of 2022. They're whipsawy days. Even this day, back on, what day was this? Oh, I think this is the 14th. We traded up from the open. We traded up 1%. So I don't know really where we were when FOMC was announced, but just from the open of that day, we had an upper wick of about 1%. So I could absolutely see us trade up, or even if we trade a little bit higher on Monday and Tuesday and get just a little bit closer, go snag those highs on the first trading day of February, and then see the market reverse out, as I believe Jerome Powell and the other Fed presidents are probably very much watching the market activity right now. And one of the things that they don't want is a runaway stock market. If the runaway stock market kind of happens, then you get into a situation where people feel wealthier. People then go out and spend money, and that brings inflation back to the economy. And that is what they most likely don't want to have happen. So I could definitely see them come out in the press conference after they announce the 25 basis point increase and say, hey, we probably aren't done on hiking interest rates and probably going to need to continue to do it again in the future, but won't be like committal, but will come out and say that kind of on a hard stance. And that will probably, my guess, send the market back in the bearish trend. Anyways, this is how I'm going to look to play it on Wednesday. And I don't expect too much, even if this kind of happens. I wouldn't expect like the market just to do, one of these. I'd expect the market to kind of come down, probably find some support, try to bounce, and then, kind of start to maybe even do one of these if it's going to go bearish. And this is probably something that I'm probably going to be more looking forward in the bearish direction, because as I kind of have gone back and looked at previous bear markets, this is kind of what happens. It takes a little bit of time in those previous bear markets for where we are in this bear market. It takes more time for the bear market to kind of have that rollover. It's not as sharp like we've had the previous times where we've gotten to this trend line and we've sharply sold off. Now, this time it's going to be a little bit more methodical, a little bit more easygoing. There's bulls and bears on both sides, but I think there's a lot more people leaning bullish, especially after the price activity that we've seen here in January, especially recently, like this week and last week. And, if we go snag these highs that we've had over the previous couple of months, even December and September highs, I would imagine that's going to be a lot of stop losses and a lot of people probably feeling the pain. And we could definitely see the market probably reverse out and just kind of chop around, kind of freak some people out. Like, okay, here's the bounce, here we go. And then probably just slowly kind of roll back over. Now, that's a little bit more longer term, but for the week, I am expecting something like this. And then Thursday, obviously, we're going to get back to talking about earnings, because then we're going to get Apple Thursday after the bell and all that kind of stuff. So that'll be my game plan this week. Monday, Tuesday, not expecting a whole lot. Not expecting a whole lot. And then Wednesday, 25 basis points. I think we all know that's coming. I think the market's going to pop really strong. I think it will go hunt down these kind of tops that we've had in December and September. Those are the two previous kind of high months that we have out there right now. August is way, way higher. And then, yeah, we probably will just turn bearish because I think the Fed, they are watching this. They don't want the market to get out of control, and then they have to do more catastrophic things later on. I think that's what they want to avoid. And if they can raise like a quarter point next time to avoid having to go like a whole nother percent higher, 100 basis point higher in the future, I think they would rather take that approach, right? It sounds a little bit more logical to do it that way. So, we'll see what happens. Obviously, this is going to be a pretty important week. But if we do snag these highs, might not be a bad time to just pick up a very small bearish position on a quick wick up. And if you even want to just set an alert up here and say, hey, you know what? Let me know if we get up there. Maybe take a very, very small position, small risk managed position, and see if it kind of comes back down because it's going to be, volatile. It's going to be volatile. So what I don't expect this week is a quick run up to like 417 or anything like that. I don't expect anything like that. But that is my game plan for the week. I know it's a little bit more of an outlook into the future as well. But Alpha Hunters, hope y'all take care, and I look forward to talking with y'all next week. Alrighty, take care, Alpha Hunters.